smokers, folks, it's past 11 o'clock. This ain't no dang jokers. If it's past 11 o'clock at night and I'm recording a video in my garage, there has to be something big I have seen here, okay? And it is Zoom stock, and I want to talk about this one. And first off, like, why do I look so red in this video? Like, holy smokes, man. Do I have high blood pressure, or did I spend all day at the tanning booth? Like, what is going on here, man? I don't know what's going on with this lighting setup, man. I look like... Whoa, it doesn't get better. I don't know what's going on, but wow, okay? That's all I'm going to say is wow. We're talking about Zoom stock in this video, all right? I don't know what's going on. Maybe I should go get a checkup after this video is over. Holy smokes, man. Or maybe it's just a camera. I don't know. I'm going to have to look in the mirror. But Zoom stock, that's what we're talking about. That's what we're here in the garage at past 11 o'clock at night for. Because I saw this stock, and it's crashing after hours, after the earnings. We're going to talk about the earnings. We're talking about my opinion on this stock, if this stock's a buy, if it's not a buy. It's going to be at its 52-week low tomorrow, just flat out. I mean, it closed at 227 after hours. Its 52-week low is 238. So, yeah, I mean, especially if it's a rough day in the market tomorrow, good chance that one blows through that 52-week low. So I thought this was worth addressing, talking about this one. I mean, honestly, there's a lot of stocks that have been just devastated and are probably going to continue to get devastated over the next few weeks. And so we're going to talk about this one, which is one of just many stocks out there that this is happening to right now, and see if there's any long-term opportunity. Because with some of these stocks, there's a true, like, you know, a lot of money to be made, and then some of these stocks, it's like maybe not so much. So we'll talk about that in this video. And if you didn't already hear, the deal of the century is about to start here very, very shortly. If you want me to notify you as soon as that deal drops from my private stock group, we haven't done a deal like this literally since last Black Friday. So like this is once a year deal. Like if you want to join my private stock group, like this is your one chance to get in. If you want to get in for like a deal steal. If you want me to send you over email, you can fill that out. If you want me to send it over through text, I can send it over that way. And check out pin comment down there. And make sure you're subscribed to this dang channel. This is Financial Education 3. And you just never know when I'll just drop a video in the middle of the night, like on this channel. Like that's one of the great things about this channel. You just never know when a video is coming. And that's why it's important to be subscribed to this channel and have notifications on. Alrighty, guys. So, like I said, Zoom stock, it's going to be under a $70 billion market cap likely tomorrow. Depending upon how much this thing goes down, I would say somewhere between 60 billion and 65 billion, maybe 66 billion tomorrow. Once again, we'll see how much it really truly goes down. But I think it's worth noting, let's be honest, this was one of the most talked about stocks last year. In 2020, I can't name 5 stocks off the top of my head that were talked about more than Zoom. I don't even think I can name 3 off the top of my head. This was arguably the most talked about stock in the stock market in 2020. And the stock price went over $500 a share, well over $500 a share at the peak, right? Because all of a sudden it was like, hardly anybody had heard of Zoom prior to Rona. It was like something a little more niche product. And then, needless to say, all of a sudden every company out there is forced to work from home. And Zoom becomes this massive Goliath, literally overnight, and snap of fingers. It was one of the craziest things. I mean, there's not a stock I can think of that benefited more from that whole situation. Even Teladoc didn't benefit as much, and that's in the healthcare space. Even that company didn't benefit as much as literally Zoom did. There's no stock I can possibly think of that benefited that incredible amount last year, okay? And so I think it's worth also noting that this was a $75 stock prior to Rona. If we go back 2 years ago, okay, which seems like 100 years ago. I mean, because 2020 felt like 7 years and 1, right? But if we go back to 2 years ago, to November of 2019, this stock's $75 a share. So it's at least worth noting here that the stock is still up massively on a 2-year basis. Yes, it's down a ton from where it peaked out at $500+, but it's down a lot. Now, also, remember the business model, the fundamentals of the business model also came, years ahead of where it should have been, right? And so that's something good of note there as well. But yeah, the stock's still up massively on a 2-year basis here. All right. So I want to look at the earnings first, which if you didn't know, we're starting to cover the earnings on the Hungry Bull app. This is our first earnings season where we're actually covering earnings inside the app and trying to keep everybody up to date with all this. The next earnings season, we're going big, baby. We're trying to cover as much as possible. Every single big name company out there, we're going to be trying to cover it next earnings season. We're going to be the earnings warehouse. Let's call us that, okay, on the Hungry Bull app. Download it now, iOS, Android, absolutely free to use that, okay? So It looks like EPS beat. They came in with $1.11 versus $1.09. It's not good for Zoom. It's just not good. They came in with revenue. It was also a beat, $1.05 billion versus an estimated $1.02 billion. That's, once again, it's a beat, but it's like this big of a beat. And for a stock like Zoom, high growth stock that so many folks were super excited about, and at a bigger valuation, like if you come in with a little teeny beat like that, you're going to get your stock beat down, just flat out. Like if you're beating down dog stock in terms of, if this stock is trading at some, forward P of under 20 or something like that, it's a different situation. But when you have a forward P like Zoom has had over the past year or so of 50, 100, if not 100 plus at some moments, right? You have to come in with ridiculous numbers. And if you look at Zoom's price to sales ratio, if you're going to have that sort of price to sales ratio like the stock has had, you have to come in with the big beats. And if you don't come in with that, a lot of folks that are invested in the stock or trading the stock are just like, not the one here. There's not enough, going on there, right? Revenue increased 35%, which is a very nice number from a year earlier. Net income increased 71%. That's something I love to see in a company. Not many companies can do it, but net income growing at a much steeper rate than actual revenue. Okay, Zoom posted its slowest growth. This is the key part, okay? Zoom posted slowest growth since 2018, just before its IPO in 2019. That's something a lot of investors look at and they're like, okay, it seems like this was the big growth engine and now it seems like it's getting worse and worse and worse, right? 35% is still a very nice number. There aren't a lot of companies that can just grow 35%, so that's a very, very nice number, but when it's your slowest growth since 2018, it's going to turn off a lot of folks, just flat out. The company said it decided not to acquire cloud contract center software provider Five9 for about $15 billion. So I guess Zoom's going to try to do their own thing, right? And they're going to try to launch in early 22. That's interesting. That was a huge acquisition, even for a company Zoom size. I mean, that almost $15 billion. And from my understanding, there is some fees as Zoom has to pay, and some pretty big ones to that company Five9. So as far as forecast goes, Zoom warned investors of a revenue slowdown as the pandemic comes to an end. Thank goodness. Let's hope. Okay, let's not get too ahead of ourselves. Let's not pop champagne balls. Let's hope. Okay. The company forecasted adjusted earnings of between $1.06 and $1.07 per share. Revenue of $1.05 billion to $1.053 billion. Okay, that's pretty specific. This came above analyst expectations, but once again, it's just barely above. And so for a company like Zoom, that's just not impressive to the investor base, and especially anybody that's trading the stock, put me to sleep, okay? Now, Zoom has some very, very good things going for it, okay? Not just the growth. I mean, still 35% growth. If that's your slowest growth, it's still impressive numbers. But Zoom, I think one of the biggest factors Zoom has going for it is, I call it the Kleenex effect, where a lot of people, if they need a tissue, they've just been trained to just ask for a Kleenex. You have a Kleenex? And especially in prior generations, this was even a bigger thing. I think it's getting a little bit more lesser to an extent nowadays, but especially in prior generations, like baby boomers, a lot of them were just if you ask for a tissue, you ask for a Kleenex. And that's just sick if you're the brand that is that, right? For my generation, the millennial generation, and even the Gen Z, if you need a ride somewhere, you say, I need an Uber. Hey, get the Uber. That's the popular thing, right? And so Uber, unless you're really weird and then you ask for a Lyft, okay? No disrespect to Lyft people, all right? But, that's in all seriousness, that's a huge deal. When you can become the name for something that's a subject, right? It's a huge competitive advantage. The fact that most people, when they need a ride somewhere, they say, hey, can I get the Uber? Or they go to Uber. That's a massive deal, right? For Zoom, when most people need to have a business meeting, most people, they say, hey, give me the Zoom link. Send over the Zoom link. Let's jump on a Zoom, right? It's become the name if you're going to have a business meeting. And so when you are that name in a big space like that, it's a great thing, man. It's really, really powerful, and we can't just overlook the fact that this company is, at least for as long as I can see, going to be known as the thing. If you're going to have a business meeting, you send over the Zoom link, okay? So that's a huge, huge deal. However, there are a lot of competitors in this space. Everybody wants to compete in this space, and the technology is not It's not rocket science technology, right? It's impressive, but it's not that impressive, okay? Of the scales of impressive technology, Zoom is not the highest tier. Let's just put it that way, okay? So, in my opinion, obviously there's a ton of competitors in this space, but there's two real companies that are going to compete with Zoom, in my opinion, over the coming years. One is Google through Google Meet, and the other is Microsoft Teams. Those are two main, in my opinion, competitors that Zoom has to worry about over the coming years. Now, the worst part for Zoom when it comes to this is Google doesn't need to make a bunch of money off this business. Google has a million other ways to make a bunch of money. Zoom is going to be forced, if they want to make any real profitability, it's going to be from their video conferencing, right? At least for the foreseeable future, meaning the next several years. So Google, if they lose money on that business, it doesn't matter. If it just means more people in their ecosystem, great. Same exact thing with Microsoft. Microsoft has a million other ways to make money. So if they lose money just from the video conferencing aspect, they don't care. It's like you get the package with Microsoft Teams and whatnot, and they don't need to make bank off this, which means essentially Google and Microsoft can throw in other competing products that make you want to just use their products over something like Zoom, where it's more of a standalone product. Google can say, well, you get this as part of it. You get the G Suite, right? You get this, and you get this, and you get this. Microsoft can say, well, you get this. Why do you need to use Zoom? Just use our video conferencing. And if it's something close to Zoom, then a lot of folks are going to say, okay, this is fine. I'll just use Microsoft Teams. I'll just use Google Meet. So that is a factor we have to think about, and especially when it comes to pricing. And remember, businesses, it depends on the business, but some businesses go through an annually they'll look at all the costs of the business, right? Other companies, it might be on a 3-year basis, 5-year basis. What they'll do is they'll look really in depth at all the costs of business, and they'll say, how can we save money? And if you're spending a ton of money on Zoom as a company, and you think, well, we can just use Microsoft Teams or we can use Google, and it'll pretty much do just about the same exact thing, and it's going to save us a ton of money versus Zoom, you can definitely consider that, right? And if companies start to consider that, Zoom also goes from this to this to this, right? So this is something big to factor in. This is why it's extremely important. If Zoom's going to be around for the long term, I'm talking 10 years from now and longer than that, they need to become more than just something where you're meeting over a video conference, just flat out. They have to become a lot more than that, because when they're literally directly competing with Google and Microsoft. And like I said, those guys, they don't need to make money from this. So that's a big factor you have to take into account if you're thinking about buying the stock, right? Now, in regards to this company, the valuations come down a lot, right? From back in October, this was a $131 billion market cap. This was a forward P of 140 to now it's a forward P of 50-ish. And after this drop tomorrow, it's probably going to be a forward P of in the 40s, somewhere in there, right? With a market cap tomorrow of, remember the correct number for this right now is like 71 billion. After hours, it's in the 60s likely. So it should be something with a 6 in front of it for market cap tomorrow, and it should likely be a forward P with something in a 40 in front of it for something, right? And so that's not crazy. It's not a crazy valuation for the stock anymore. It's not one of those stocks you say, this is ridiculous. Back last year, you could say that about Zoom when it was trading at 130, 140, 150 billion dollars, and the forward P was ridiculous, and the price to sales ratio was 100. You could look at the stock and be like, this is just silly. Okay, this company is massively overvalued. You can't really do that anymore, especially if the stock's down a ton more tomorrow. You can't say this is a ripoff. This is the biggest ripoff in the stock market. You can't say that from that perspective, okay? Now, something to worry about here. Not revenue growth so much. Revenue growth expected at 51% there, almost 18% there. The thing to worry about is there's 28 analysts that cover this stock, all right? And look at the numbers here, all right? The analysts have them doing 478 here and dropping a penny next year, down to 477. That's a very troubling thing to see as an investor, where this company has its net income and profits going through the roof, and all of a sudden it just dies, right? And that's exactly what's expected to happen in Zoom. And this gets us into what I was just talking about in relation to their competitive threats of Google and Microsoft, other companies as well, but really to me it's Google and Microsoft. Those competitive threats, and potentially making it where Zoom has trouble raising price for customers. Never mind if let's say Zoom wants to launch other products that are unprofitable, because remember, In B2B, is very often companies will launch new products, and those new business lines lose money for years. And sometimes they never get to profitability. And so if Zoom wants to launch a new product here, a new product there, highly probable they're going to lose money at least for the next several years from that. Zoom's probably not going to launch a business and from day one they're making profits. That's not the way it works. You can start having revenue coming in, but you're likely losing money on the bottom line. And so if you have that compounded with Google and Microsoft saying, we don't need to make money from this. This is just something extra we have there. And you have companies saying, man, we're spending a fortune with Zoom. Let's just start using what we have at our disposal that might be much more affordable. This is where you get into some real trouble with Zoom. And if all of a sudden those growth rates come way down, all of a sudden the growth investors start going bye-bye. They start saying, I don't care if Zoom only is growing 12%. That's not, this isn't my type of stock if it's growing 12%. So those people say bye-bye. And then if profitability starts shrinking, the value investors are saying, I don't want a piece of that. Their net income's going the wrong way. Their EPS is going the wrong way. And so then you wind up in this really weird situation that Zoom can end up in, where essentially the value investors don't want a piece of it because your EPS is starting to downtrend. And then the growth investors don't want a piece of it because your growth is not enough. And so all of a sudden you end up in this limbo where it's like, is anybody going to buy our stock? So that's kind of the situation for Zoom stock. So the verdict, in my opinion, when it comes to the stock, the way I personally look at it, is I feel like it might be a hold if somebody already owns it. But, just flat out, I can't buy this stock. There's too many other stocks that are much more interesting that I feel like the growth stories are more intact. And they're less of one-trick ponies in this stock. It's hard for me to say sell a stock either because the valuations come down a ton on this stock already, right? Never mind where it's at tomorrow. So I think it's a weird stock in a weird place where I wouldn't call it a buy, but I also wouldn't call it a sell. And for somebody like myself, I'm like, I don't really need to get in it right now, to be quite frank. If it gets into something with a 1 in front of it, hey, it might get much more interesting. And I don't think it's out of the realm of possibility that it could get to something with a 1 in front of the stock price. Remember, Teladoc was $300 plus a share this year, and now it's today at one point it was trading for $107. Some food for thought here, guys. So hope you enjoyed this video. As always, talking about Zoom stock as far as what is a deal. It's the massive Black Friday sale. It's coming up here. If you want me to email you the deal or send you it over text, check out pinned comment down there. Much love as always, and have a great day.